Welcome to the Finance Podcast. The topic of this episode, Trends in Embedded Finance, with Julia Dutkowski from Yapeel.
Artificial intelligence in the investment process, revolution or hype. Good morning, everyone. It is hugely impressive to see such an audience for this subject of today. I would like to welcome you. It's great to have you, all dear audience and guests. A special welcome I would like to address to our protagonists of today, our key speakers, namely Georg von Wies, Portfolio Manager at Braun von Wies Value Investing, Reda Jörg Messig, you are co-head of Quants and the Solution Team at Pictet Asset Management, and Dennis Hagander, you are Sales Director at Wellsark. So it's a great honor to have you on stage today with me to give you a lot of valuable insight into the subject. Andreas Gentilini, he let himself excuse for today, unfortunately, but we have a good coverage of the subject, so I don't doubt that we will have to carve out certain important elements of our conversation. Myself, I'm Christian Trixel. I'm advisor to TGGC, the Good Guys Company Consulting Group, and pleased to be with you today. We have roughly 40 minutes. Let me start with a short introduction. Artificial intelligence has moved from a buzzword to a very severe subject in the boardrooms and on the agenda of the senior management of asset managers. Today's question is not longer, in my view, if artificial intelligence is used in the investment process. It's far more how, where, at what consequences, and at what costs. Now we will focus on the real-world application. Does artificial intelligence genuinely move and improve decisions and service quality across the investment operating model? And where are the limits? What will the future bring in terms of investment and related services? Is artificial intelligence in investments a future important or relevant competitive edge which will separate future winners in investment management from the laggards? Let me start with two questions to you, dear guests. So, first question is, who is using artificial intelligence in their business model already? Please raise your hands. Fair enough. I would say the majority, right? So more or less 50%. That's a good guess. Value. So fact is, I assume it's going beyond Microsoft Copilot and ChatGPT. Maybe the second question, if you allow to help us a bit, is who thinks that artificial intelligence will be pivotal and a winning edge in future in investments? Yeah, Georg, what do you say? Probably closer to the majority, right?
Yeah,
okay,
careful.
we crossed the democratical 51% line probably. So I think that's a clear view. We are here today to give you, let's say, good arguments to improve your decision, hopefully for your decision you have to make tomorrow on artificial intelligence. To set the context, I would like to refer to a recent survey which was conducted on what will drive business decisions of tomorrow of investment managers. This survey was conducted by TGGC, the Good Guys Consultancy Group, across leading Swiss and international wealth management institutions. So message number one on the question, top key focus themes at management level. On the left side, we see, of course, That's probably not coming to a surprise. The growth themes are significant. At the top, 43% responded this is a key theme. This includes mainly also product offering questions in terms also here related to private market extension. We had market and market access and penetration themes here, which are very relevant, and of course, operational efficiency as a cornerstone to make it happen. Number 2 already was, at this stage, digital and artificial intelligence topics. Use of technology to improve investments and business processes are absolutely key themes at board level. And I think one point I would like to mention here is that 1 of 4 sees that as the key theme going forward. And looking a bit more on the details of the question, is artificial intelligence a key enabler to drive future business performances? We simplify just looking on the operational process functions, which is research, portfolio management, execution management, risk management, reporting, and mid-office, something which is surely not new to you. The dark green spots, however, that's important, are expressing that there's strong consent and agreement that this is pivotal and very important. And on the left side, you see then the digital level of implication, which is from classic automation to AI augmented or included to AI driven. Now let's start with the bottom line here. You see the dark green boxes here, reporting and mid-offices, is clearly telling us that the respondents think that artificial intelligence is not only an important element, it's almost artificial intelligence driven going forward. Then we have artificial augmented is on the research, portfolio management and risk management side, and that's surely a subject we will address today for you. Dark green boxes. So what the essence of this survey tells us is out of 6 functions, elements in the investment operation, 5 are dark green or perceived to be very relevant, that artificial intelligence will play a very important role going forward. And that's the subject we want to address today, to hear it from the specialists here at our table, at our panel, how you view things. So if I may, I just let briefly Plus introduce you to give us a bit more about your role, about the functions, about the positioning of your company, that we better understand when we dive into the questions of from which angle you are arguing. If I may start with you, Georg, please.
Thank you. Yes, thank you very much. Welcome, everybody. So at BWM, we've been in business since 1997. I'm one of the founding partners. And what we are is we're boring old value managers. You see that in the name of one of our main product, the Classic Global Equity Fund. We manage it according to classic investment principles, meaning, and processes, meaning we look for cheap stocks. We do intensive research on them, try to get to know them very well, and if we think that we're buying dollar or francs worth of value for 60 Rappen, then we buy the stock. And then hopefully the market will correct the inefficiency over time. So we have a very low turnover portfolio, a few companies, about 25 to 30 that we own and we know very well. And most of our time is spent either following them or looking for new ideas to replace the ones that have gone up or that we sell for another reason. If for example, they don't do what we think and we have to sell them anyway, which happens all too frequently.
Thank you. Rita?
Yes, hello. My name is Reda Messick. I'm co-leading the quant team at Pictet Asset Management for almost 2 decades now. Originally, I come from factor investing, value, but the quant way. So, recently, like the last 5 years or so, we started to use AI, more specifically machine learning, to invest. So basically, the shift has been quite dramatic for us, but I think it's just the beginning. Basically, before we started from an idea, an anomaly has an origin like value, and we do signals to do it, to invest on it in a disciplined manner. And now we are shifting to, we don't have any conceived idea, but we conceive an algorithm that learns from enough examples to then invest in a quantitative manner. So basically, there are a lot of commonalities, like anomalies. We play anomalies. From the first one, like the beginning, it was preconceived. Now it's learned.
Thank you for the introduction.
Thank you. My name is Dennis Egander. I'm sales director with Wealtharc. And Wealtharc is a wealth tech company where we focus on enabling independent wealth managers and multi-family offices to focus on serving their clients. So our core essence is providing a strong data foundation in a multi-custodian setup. And on top of that, we can build portfolio management modules or anything our clients would require. Thank you.
Thank you, Dennis. So let me start maybe with the first question, starting with you, Georg. You are a well-known boutique of value investors with a very long and strong track record. So what is the impact of artificial intelligence tool? Does it change something in the way you do one of these functions in the investment process?
Yeah, sure. No, so it is important in the sense that it's another tool, a new tool that we're learning how to use in the research process. We use LLMs to help us find things out. If you want to know, for example, who might be, say you're interested in a company, a software stock which has gotten pummeled yesterday. Was interesting to me, so I wanted to know who else does that, because it's a segment of the market I don't know anything about. So you can put that into an LLM, and then you get a list of names, and that's a good start for then doing the research. But the problem, of course, with LLMs is they hallucinate, they make things up. So what you want to do is you take what they give you, and then you verify it yourself by looking at the company's websites and doing the normal classic research process. We also use them to summarize conference calls. That's helpful. That speeds things up sometimes. But of course, you pay a price for that. Namely, you miss certain nuances. Sometimes it's important to see how a company doesn't answer a question that they were asked. And that, of course, the LLM will not pick up when it summarizes. But again, it's one of those trade-offs. So you have to know what you're doing in terms of that. And then we use a lot of technology just in our processes, in our portfolio management. We've built a lot of it ourselves. And when we update things, we have to change a macro or something. We find AI very useful for programming these things, which they're not very complicated. What we do it ourselves, a lot of it. So it's not the high art of programming that we're practicing, but it's good enough for that. And so for us, it makes life a little easier on some of the steps that we take, but it's not the thing that's going to, so far it has not changed the basic way that we work very much.
Very interesting. Thanks for sharing. Maybe just can I conclude on, or let's say extend on the question, you are from the angle, Rita, from quantitative investment. Is artificial intelligence more important in a certain context in the way how you do things and think about things?
Yeah, so it has a lot of ramification, but let me go to the core of it, basically signal construction. During COVID time, we had an internal debate in the team saying, does this machine learning add value or not? It was very polarized. So we did an experiment and, long story short, we came to the conclusion actually that yes, it really adds something you don't get with classical methods. So it enables you to get interactions that are quite deep between different sorts of data that we couldn't do before. So in that sense, yes, it really adds something that was not there before.
Mm-hmm. Interesting. Yeah, and big data asset management is a global leader, so you need to have the right answers going forward to survive or respectively be on the leading panel in the future as well. Dennis, maybe one question to you, because you are more concerned probably also on the issue, which is the data quality, which I heard. Is that something you see with your clients, with your prospects as well, that this is an issue on the data source and data sourcings and quality?
Oh, definitely. I mean, whether it is the data foundation in a multi-custodian setup, so we consolidate data amongst several sources and bring it together as a foundation, or whether it is in an institution. I remember back in the days when the banks wanted to become more data-driven, they wanted to move ahead. They invested a lot, but first they had to get their data management framework in order. So if you ask me, the key question is the organizational maturity that will determine at which speeds companies can adopt AI. And the same goes for us. So we really focus on ensuring the foundation, so we don't amplify any data quality issues. And once the foundation is right, you can use agentic AI on top or whatever you may want.
Really interesting. Can I ask you one question on operational maturity? How do you define operational maturity?
Well, that's a good question, right? I would say first, let's focus on data to have a proper data management framework in place. What does that mean? You need to understand your lineage. You need to ensure a clear governance and ownership. So I feel, the more we also start using AI, agentic AI, it's really, really important that we retain the human oversight on it. And then obviously a proper data quality framework. And if you look at it in general, right, I also think people are a factor. I mean, I'm not sure about all of you, but I at times feel overwhelmed with all the innovation coming to the market. So I think we have to ensure that people also have the capacity to adopt and to innovate. Because I'm fully busy day in, day out. So if people are not at a place where they have the capacity to adopt, that's going to be our first challenge.
Okay. Thank you. Really interesting. Georg, when you say a lot of, well, not a lot, but let me frame it right. You said you develop important elements on your own. Is it because you cannot rely on external sources, or is it that you believe that you do things more accurate to the stage of evolvement in your processes you are?
No, it's because we're old. We started, in 1997, and some of these things that we wanted weren't around. So we developed them ourselves, a system, to track our performance. I know you can buy that off the shelf, but we have our own thing now. And what we also have is we can not just track the performance of the stocks, we can also analyze how well our analysis has performed, or how well we've done in terms of analysis. So we can read the intrinsic values that we estimate for companies into the system and combine that. That's not something you can buy off the shelf, because obviously it's not something most people need. So that's why we have our own IT and our own system.
Interesting. Did you evaluate specifically also external solutions, or is it something that you say, well, that's fine, fit for the purpose?
No, we did it all wrong. We started developing it a little bit, and then a little bit more, and then now we're stuck.
Okay.
But it's good, but it does what we want it to do, and so it's not something we can sell. It's your classic homegrown solution where you have to know a whole bunch of rules that nobody else would understand. It works for us.
Very good, very good. Rita, I don't think
it works for our compliance officer. That's very important.
That's something
very important.
we can elaborate on as well. A very important element, I think. As a leading asset manager, Rita, you cannot probably make something like a trial error exercise out of it. Or do you try to?
Well, I think we have something very in common actually on that side. We do stuff by ourselves. So basically, I think really the key characteristic of Quest of our team is an hyper integration of specialists. So basically, the developers are with us. We take data, raw data, most of them coming from value and all the intricacies of it and name it, libraries, compute power, and we do all our everything ourselves. The reason is because, like in the machine learning space, you know, when you take finance and the rest of the world, it's a very different world. Like you know, if you want to classify spams, then like you know, a high school kid today, if he has a computer, can have an accuracy of 95%. And in finance, at least that's my angle, you just have to be 55% of the time right, and that changes everything. So just in order to adapt that and to have a scientific approach on controlling each step of the process, you know, you use machine learning, AI, whatever you want, you still have to be very square on the process. Mm-hmm. The only way to do that is hyper-integration. I mean, at least that has been very successful.
Yeah, really interesting. Is the function of artificial intelligence support with you in the team, or is it at the higher level supporting cross functions?
That's a very good question. So in our process, it's, sorry, the jargon, it's an alpha generator, it's a signal, so that's really internal in the team. You own it, you know, ownership of risk should stay, whatever happened with AI. Yeah. But that, I mean, the AI in Pictet is not limited to our team. Mm-hmm. I mean, you have also a whole corporate level body that is very useful for us to use more the, you know, LLMs, agentic AIs, and that's now basically influencing all the functions. And as you said, I mean, just giving the ability to the people to a bit more than play around with it and to imagine the future with that. And I can say from that side that the last, let's say, year or so, the progress has been accelerating really in a spectacular manner. Yeah. 1 year ago, I would say that doesn't do coffee. Today, it still doesn't do coffee, but almost. So it's quite impressive what you can do with this.
Yeah, yeah. Interesting. So you are, Dennis, you are mainly looking after the processes also of clients. How do you see that data governance of artificial intelligence is embedded in organization? And maybe coming back to the point Georg made in terms of responsibility and compliance, you know, how do you see things are probably more than evolving, but moving to clarify this type of subjects?
Okay, yeah, that's a big question, right? I think we have to differentiate whether we are looking at larger institutions. When the institution becomes large, you need a proper data management or AI management framework in place. Obviously, you need clear ownership. You want to use only reconciliated data, and then here again, you know, implementing it end to end is of high complexity. That will bind resources and so forth. Now, in our environment, the topic is a bit simpler because we're serving mostly smaller businesses. And there, obviously, the models we use, even if it's in compliance, we have to make sure they're not too complex and transparent, so they're understandable also for a regulator. But we can build it really step by step.
Very good. Very good. Time is flying, I just realized. Should we open first set of questions to the audience, maybe just to leave a bit of space, and then we can continue? I have a few set of questions. Can I ask you? Dear guests, audience, question, please.
I would relate to Klarna. So Klarna, before they went public, they talked a lot about AI and how relevant AI is to their business model. So I want to look at it from a different perspective. Would you scrutinize your investments into companies that are adopting AI to be more efficient? So would you favor companies that adopt or are loud about AI?
I don't care. I mean, in the sense that if it makes sense for them to adopt AI, then that's good. Then it's a part of the business model we need to evaluate. But I don't think that it's inherently a better thing than a business that doesn't use AI. It's just part of what they do. And then the question becomes, does it give them a competitive advantage? What are the cash flows coming out of it? The usual stuff. But as far as I'm concerned, whether or not they use AI is dictated by whether or not their business allows it. For example, Teleperformance, the call center, they'll probably be using a lot of AI. Okay.
I mean, you could look into the quarterly reports, annual reports, and track like how often they mention AI. I don't know. Could be. I'm not saying it's.
Yeah, I'm sure.
It's just a question whether
it's fashionable.
For example, is doing that.
Yeah.
It's like, let's track the fashion words.
Yeah. Well, first of all, I'm a quant. You need to be 55% of the time right. So the first thing in our team, what we need to do is actually not have an opinion about that one. So basically, because we learn, it's a learning algorithm, we really want to make sure that we get signals that were already there a long time ago. So whatever is a disruption, potential disruption, we need to hedge it out. So that's really for our process. Now, if whether Pictet is doing something, I'm pretty sure like any analyst now is, we have like even like standard vendors. It starts to be now a, kind of more and more a commodity to be able to scan a huge universe, something that was more for a quant actually before, but now it's, everybody can scan a big universe and see if there are patterns. Now, on a personal note, I wouldn't take that as a good indicator if they mention too much we're doing AI.
Interesting. Thank you. You want to add something?
I'm fine, thank you. Yeah.
Very good. Questions, please? We are still open. If you answered already all, that would be frightening. Frightening, good. May I, ladies first? Yeah?
Thank you so much. Salma Belgali, advisory in AI for C-level and family offices. I have actually a question to you, Christian, because I see that you're very present in private markets. And I would like to know, where do you see actually AI helping in adding value or increasing ROI in the private markets or private markets deals in general, and how those efficiencies and productivity KPIs are measured? Thank you.
Thank you for the question. I think it looks a bit archaic, to be honest. On the investment process level, you see a lot of intransparency. You see a lot of data quality which is not comparable to each other. So taking investment decision on this space is a very difficult one, to be honest. We see mainly, and also with the partners we were working on, artificial intelligence and the future, mainly that the client front is driven by artificial intelligence. So that's in the process quasi an early stage, lower hanging fruit to serve client relationship management tools, for example, with intelligent wraps of answers, of reportings, and so forth. But further down the road, I think that the traditional type of investment field is far more advanced. And I think probably also important to see the private market has a certain access barrier. Probably the pressure to move forward is different. I don't say the pressure is not there, but I think probably the point of orientation more is coming from the traditional side to see how the implementation across the operational investment processes, including client servicing side, is then played. There was another question. There are a few questions. Great. I think you were first, right? Yeah. Okay.
Thank you. Just wanted to speak to you. You already mentioned the topic of commoditization. Can AI potentially just become a commodity, let's say, 5 to 10 years forward, where everyone has access to, say, the best model? Let's say they can get live access to all research reports, all processed. And in that future, is there maybe an edge for humans again to meet with CEOs and get kind of these small little tweaks in tonnage, maybe some information that's not in the research report? Will that be the edge?
I think so. Personally, I think that's where it'll come down to. As far as I can tell, the LLMs are getting better, but from what we understand from the benchmarking studies, that they're not improving that much anymore. There are certain inherent fallibilities, like the tendency to hallucinate, which will not go away. And so, yes, to the extent that everyone depends on summaries of conference calls for their information, the person who reads the conference call and says, that's a piece of information that was not in the summary, but it's important, will have an advantage. So yeah, I think it's going to, in some, because AI homogenizes information, if you're a contrarian like us, you're going to be looking for those instances where it's, where the non-standard information is important. That doesn't mean there's any less work. It's just a little different.
You want to add, Rita, please?
Okay. Yes, no, and I mean 5 to 10 years from now, that's probably difficult to comprehend, especially with the speed of development we're seeing at the moment. But I do see also a risk of historical biases, because AI is only ever able to use historic data. So I do believe that the human factor can make a tremendous difference, even if it's when combining micro factors and macro factors together, or perceiving human emotions, right? Which I'm in sales, so it's still a people's business. And I think that's a factor we should not underestimate.
Yeah. I mean, maybe quickly on that one, personally, as a quant, I don't believe that there is like the ultimate good model. It's more scared. We are scared to that. I don't believe so. So there, and it will never be, especially with the current way of doing things. Just in terms of flow, information theoretically, like the information, you just see that the scales are not right. Will be there to commoditization? Absolutely yes, and very fast. So there will be like, the green spots that you have there. I mean, you can think about it like eating up stuff. So the organization have to be agile enough to adapt to that. But no reason for being something dramatic about it. And just on the note for the informational advantage. I mean, that's almost the basics of active management, right? I think there will be a disruption. I can imagine that the earnings calls will be actually, you have a CFO saying words, and then you have an LLM that actually, spin it in a way. It's the same information regulated, spin it in a way that makes it not hackable, or change it, even taking inputs from social medias. I think this can happen fast. I mean, it's a little bit science fiction what I'm saying, but it's the technology is there, and this kind of the information flow will change dramatically. That's for sure. Not only in finance, by the way.
Thank you.
Thank you. We had other questions here. Yeah. Please, go ahead.
Does anybody have an opinion from the asset management side what FINMA thinks about AI making automated decisions and investments?
Yeah, I think I can take that one. I feel I was targeted here. So I really, our investment process, let's go straight to it. It's with machine learning, we are able to do, we have evidence that we can create an overperformance, a compounding overperformance outside of styles. So you just see that it's embedded in more of a traditional quant way. And I strongly believe that a proper regulation is important there, just to make a bit of hygiene of the hype that is going there. Now, for a strong opinion of mine, I will never let a machine do an automatic trade. So there are different stages, and at each stage there is a 4 eyes check that is happening. Once you go out of there, I mean, you can do it, but you need to rethink a little bit the ownership of risk. But for us, for what we do with machine learning, there is always a check. I mean, you cannot at each stage.
Thank you. There was another question.
coming clearly from what you said, the information asymmetry that existed before is diminishing, whether you're in value investing or in any strategy. And my question is around risk management, and is there an advantage that remains there for the professionals, the asset managers, and how does AI come into that?
I think the information asymmetry may increase. I don't think it's going to go away, because it depends on how many people rely on AI-generated summaries, for example, of conference calls. If that becomes the rule, most people do that, then the person who's paying attention personally has an advantage. The information's already available anyway, right? It's all there. It's just a question of how fast now it gets processed. So it will be interesting how all this works out in the future. I mean, what we don't know yet either is how the LLMs will work once they've trained themselves on their own output. Right? Once what kind of effects that will have on those models. It's going to get very interesting. So I'm not ready to write humans out of the equation yet. I think it's going to be even better time for people who think. Because it's so easy. You know, the thing with AI is it's so easy. It's just and then you get a big text. It sounds good, and then you start looking at it, and you're like, oh, that's not quite right. But you have to really dig into it, and I think that's going to be the same thing on the research process. But you know, maybe I'm just hopeful that my way of life will not disappear. But I just don't think it will.
Yeah. No, but I couldn't agree more. I don't believe there's any shortcuts with AI. I think we really have to do our homework, and you see the same way people are able to prompt. People that were in consulting are able to approach a problem in a structured way. The same way they will write their prompts in a more structured manner, and they will get better input, but at the end they will have to assure the quality by themselves. So it's really just a question of how you use it properly, and I think the human factor can still be a differentiating advantage.
Yeah. I mean, you see, as quant, I like to have discretionary managers because that's where the anomaly is coming from, not value investors.
It's all right.
But it's true. I would say it so otherwise. So, but it's actually, if indeed people don't do their homework good enough, then it could be that suddenly the discretionary manager will love to have, you know, Sunday using machine learning models, because this will create new types of anomalies. Even though I think we are still very far away from that. So I think it makes things faster, that's for sure. Speed is of an essence. But I think there is something that will always remain true. It's like markets are never in equilibrium. So that won't change. It will just make things maybe more stable or not. That's a little bit the question. I don't think it will make it. I don't have a strong opinion for that, but faster, that's for sure. Things will get faster.
Interesting. Let's take 1-2 more questions. Yes, please.
In your sort of day-to-day,
can you please take the microphone, please?
In your day-to-day, on average, how much would you say is the split between AI helping you generate differentiated ideas versus perhaps just executing faster on the same consensus idea?
So actually, let me take that one because, you know, like I'm the quant, machine learning, and so on. Guess what? I think our job is the one that will get most disrupted. You know, just basically, let's do the stuff what we do today. What about if you use AI? And recently, we put an AI model to our infrastructure, very private, you know, and let the youngsters play with it, and it's really impressive. So basically, what I can say is, for the moment, we are still playing around it, you know, for our quant job, basically, you know, generating signals and stuff like that. I think it's reasonable to believe that I want to say 1 year, but let's put 3 years, always times pi, right? In 3 years' time, for the same content, we will have to use half of the time. and the quant, from a quant perspective, it's the disruption is bigger because we are used to check. And what AI, you know, as an organization, when you put AI, you need to have a function that checks that it makes sense. But it's already inherent. It's already a big proportion of the job. So all the rest will be compressed quite a bit.
Thank you. So with this, I would like to maybe ask a final question to you, since we have this experience here on stage in terms of skilled investment managers. I would like just to give you, but please treat it as it should be, with a big compliance bar on it. But which stocks do you believe will be the ones which we should closer look at? You, from a value perspective, in this artificial
right, so you would expect us
intelligence.
So you would expect us to look at things that are not affected by AI, or that aren't part of the hype that's driving up stock prices. So, you know, one of the things we bought last year is Sodexo. They run canteens. It's trading at under 10 times earnings. The Compass, its competitors near 17 times. Sodexo's not quite as good, but it's not that much worse. It's growing. So that's the kind of thing we're interested in. Everyone's excited about AI. We'll look at the boring restaurant operators or canteen operators, or I don't know. We have a software stock in our portfolio called Quadient, which also owns a declining business, franking machines. The software part alone is worth multiples of the current share price if it was broken up. But it's software, so everyone's been selling it. So, you know, that's the kind of thing that we're interested in. We're interested in things that have gotten beaten up or ignored. And that's what you'd want us to do. You don't want us to own AI things.
Georg, great value. Are these stocks popping up in your models as well?
Well, actually, I will never speak about a stock. But what I like to think about is a cross-section of the market. It's the same thing. You know, recently, I mean, this year, what we have seen, and we are looking at it, we need to make sure that the market today are still, kind of similar than before. That's our job. You can't just run it. And being long, very physical asset-heavy stocks, short the rest, has been a tremendous trade, like year to date. I mean, sorry, the quant will say Six Sigma event, if you measure it correctly. That's something to monitor. I mean, there is much more than AI in there. There is geopolitics. There is a lot going on, and I think this is something that is very important. Whether it will revert or not is a big question. Our opinion, actually, today it won't revert. So we are getting out of this debate to play our alpha somewhere else in the market.
Thank you. Any company views beside of Wells, Ark?
Yes, of course. So I'm not in the place to give anybody investment advice. That is definitely my client's part. But what I'd be looking for are probably two key factors, and that is one, where do I get my data in the right quality from? And then also which companies or players in the market play an important role as key enablers to drive the adoption of AI. And I think this is also where the split will happen.
Thank you very much. I think with this we come to an end, unfortunately. I really thought it's an enriching round and circle we have here together. I think one key takeaway, probably artificial intelligence is not a silver bullet. Human factors will play still a very important pivotal role going forward. And with this, I would like to thank you, dear guests, audience, and especially also to our panel speakers, Georg, Reda, and Dennis, for enriching this round. And I wish you a wonderful day. Thank you.
Thank you, Christian.
Thank you.
Finally, the mandatory risk warning. The content of this episode is for general information only and is not a recommendation to buy or sell any financial products. All information is supplied without guarantee, and this is not an investment advisory. New episodes are released every Tuesday and Thursday.